guys, and today in this video I'm going to be reviewing my investment portfolio and kind of diagnosing the red performing stocks and kind of understanding what's going on. So of the 29 stocks that I've got, 8 are in red. Kind of at my peak, I guess, only 2 of them were in red, but obviously that's increased recently. And this is the list. Well, this is the list of the red stocks, and these 2 below are in green overall, but they've been red a lot in the past month. So what we need to do is kind of do the research to understand why these stocks have underperformed. So, and it's important to know this because it basically signals to me whether I need to invest more in those stocks or not in the foreseeable future. So I guess we should start with Adobe. Now I actually already know why some of these are in red, but it's always good to get like the full picture. So we can obviously look at Adobe, and in the past month they're down 4%. Year to date they're down 22%. One of the worst performing tech stocks this year, I'd say. They're actually reporting their earnings after the bell today. I think if we go to the earnings calendar, they're actually predicted to have growth, but you know they've already got quite a high valuation on the market, so anything less than a stellar earnings report and it could sink again, unfortunately. It's quite unfortunate. Like, you could have a stock, it's down 22% year to date, but it could still go down more. That's the worrying thing. But anyways, so based on what I saw like throughout the year, the issue with Adobe has mostly been in relation to their business model. People fearing competitors could obsolete Adobe. I've heard about OpenAI's AI Sora, and also based on some of the research that I've done in terms of the earnings, Adobe has repeatedly reduced their guidance on the last 2 earnings reports. So, like, for example, if we go to Seeking Alpha, for example, we just type Adobe and we go to news, and then we go to the earnings news. It tumbles as forecast fall short of expectations, and then there's this one again. The shares were down after hours. Again, the consensus was lower than the outlook was lower than the consensus. It's like, again, although the non-GAAP earnings per share was higher than the consensus, but again, the revenue could have been a reason why it declined. And non-GAAP as well was just non-GAAP. It doesn't take into account the GAAP results. So I guess overall, like, in terms of the earnings reports, Adobe's not really performed. But the reason why I invested in Adobe is because they've got what I thought was a strong moat. They're quite a big company with a recognizable brand name. They dominate kind of the creative suite of applications on desktop computers. So I thought, okay, you know what, they are a fairly good investment opportunity. But overall, the stock's not been performing well. And again, like, you know, you've got AI, which is able to kind of simulate images, and they might be able to create videos for people. I'm not sure how it works. It obviously is in its infancy, but in the future, Adobe could be in trouble. But I don't think that future is anytime soon. I feel like it's the distant future. But essentially, if we go to the news, it's pretty much just like speculative of how Adobe is gonna perform in terms of AI. So So Adobe are quite slow. So that's what I would say for them. So with Adobe, it's pretty much poor forecasts, slow AI adoption, and existing high valuation. You could say possibly. On a forward PE basis, they're actually pretty decent, but again, like their growth rates are pretty standard. I think Adobe is a good company, but as I said before, they might be slightly overvalued. Now, ACM Research, I already know why this company tanked. Now, this company have had its ups and downs. Year to date, spiked on earnings, then it just went down completely. Now it's kind of going back up again. It's still up overall in a year. It's a very volatile stock, and you better be careful with it because 41 at its peak to 6 is quite low. But yeah, like for me with ACM Research, it's pretty much apparently it's because they're Chinese. So basically they're Chinese, so there's a lot of speculation around the longevity and durability of its business because they're kind of a Chinese company. Not a Chinese company, but they're a US company that's main market is in China. And they sell wafer cleaning equipment. But the issue is, when your main market is China, any sort of restrictions that the US input on China, like in terms of like trade, it basically puts these companies like ACM into perceived jeopardy because you don't know, like their business could be affected by higher taxes, or they may not be able to sell to Chinese customers anymore. And then on top of that, if China decide to have their own companies in-house that do the same businesses as ACM will go out of favor. So in other words, there's a huge Chinese risk related to ACM Research despite the attractive valuation. I also saw somewhere online as well that someone said that ACM Research also moves similarly to the Chinese stock market. Now, I don't know what the main Chinese stock market index is. I have to check it out. Chinese market index. Maybe SHOMP could be it. Shanghai Composite Index. Which, isn't. There seems to be. It's not tanking, but it's not really moving in an upwards trajectory. It's down in the past month as well. That could be it as well. In a week, it's also down as well. So again, it could be moving based on this index. So yeah, I think ACM is like it's a really risky kind of investment just because of the Chinese connection, but they do grow quite well. So it's good to have a position, but you have to be wary of the business. Dexcom is quite interesting. Now, Dexcom I've always felt is quite overvalued, but they're a healthcare stock and I want to have exposure to them, to a healthcare stock. The growth rates aren't insane, but they are good, and they're also profitable as well. I think Dexcom, based on the news, I didn't see any news that indicated why Dexcom would be going down. It's not going down like crazy. Like it's only 6% down year to date. But it seems to move in this kind of up-down wave, so it could go down back to 75 potentially. Hopefully not, but if that does happen, that's where a lot of people would buy. I guess if it does go down to 75, the new PE ratio would be 48, which isn't too bad actually. It'll probably be a good time to start a new position. Now, Dexcom, I believe, have somewhat of a competitive advantage. They work obviously with glucose monitoring systems, so they obviously serve an important market. But I think they've mostly been going down because of high inflation, like just inflation not really improving, and also like just high interest rates as well, because obviously the interest rates have not improved. So that's probably what's affecting the company's growth, obviously, in terms of the stock price, in terms of investors wanting to put in. Now, if we look at October to I want to say January, it just went straight up, and I think that was because the inflation had been going down. So if we go to the inflation rate, January to October to January, I believe that was what we had on the chart. Yeah, October to January. Yeah, the inflation had gone down. Well, actually increased in December, which is kind of odd. But then by January, it went down by 70 basis points, which is pretty good, right? So that probably impacted Dexcom's stock price. But it started to go back down again since April, pretty much, because if we look at the inflation, it went back up. Let me just see, actually. It went to March, it was, yeah, it kind of started going down by March, actually. But yeah, obviously the decline only really started to get realized in April. Even after the new inflation report, which came in May, there still hasn't been much change. But that was only 2 days ago. I just need to remember. Hold on a second. So this here was reported in April. I need to remember that because yeah. Hold on a second. So yeah, this kind of thing down here confuses me a bit. Maybe let me put it to year to date. It might be easier to see. Okay, yeah, there we go. Okay, so that's better. So obviously, the thing is, it will say May 2024, but then it will say April 2024 when I put it on my counter, which has confused me a bit. But yeah, I guess this is what I need to look at. So, but I think the wider picture here is that inflation went down, then went back up, and then it looks like it's going down again. So I think because of the lack of progress, that simply is the reason why Dexcom has also been this kind of lopsided trajectory. It's got nothing to do with the business. It's the way that the economy is moving. Because the last few quarterly reports have been positive, so there's nothing wrong with Dexcom. Now, Civitas, as with other oil stocks, have not performed well in the past month. Now, and year to date it's down 4%. It's very cheap on a valuation basis, but the problem is it obviously has to be linked with the oil prices, like most oil stocks. So like if we go to TradingView, for example, and we look at the oil price, let's sort it by 4 hours. Okay, so we need more 4 hours. Let's do a day, or okay, yeah, we can see here that in April the oil price was 86. I don't know if this is $86 per barrel or what, but I'm not sure what the valuation metric is actually. But you can see, like, we can do it for a week as well. Yeah, you can see obviously it's at least $10 less than it was back in April. So, and obviously April was 2 months ago now, so it's been going down since April, the oil price. So that must explain why oil stocks in my portfolio overall are down in the past month. These three. That must explain it. So, yeah, I have to say, Civitas is declining oil price. So, essentially, the best time to buy the oil stock would actually be when the oil prices are at its lowest. And you expect them to go back up. Now, what the bottom for oil is, I have no idea. But based on a 3-year or 5-year position, we draw a line. I actually don't know what the average price of oil is. Actually, that's not accurate. I think 64 is, you could say a sweet spot. You don't really expect it to go lower than that. Otherwise, it's danger zone. I wonder if we go down to, yeah, like I said, it doesn't seem to go lower. Well, actually, it went down into negatives in April. I wonder how that happened. April 2020. Well, this was during the pandemic. This line's not straight. Yeah, I mean, getting that low is kind of abnormal. Actually, let me check in the month chart again. Yeah, I don't know how oil went into negatives. In fact, I wonder if ChatGPT knows. Due to a combination of unprecedented events. Sharp decline in demand for oil and petrol. Oversupply. There was already a significant oversupply of oil. Yeah, so basically a lot of negativity due to the COVID-19 pandemic. In fact, let me check. Yeah, Civitas declines like by half after that fiasco. I wonder how Zom did. Yeah, Zom was quite similar. 68 to 38, 32. Yeah, it's a lot. So again, like, I think any time oil has a sharp decrease, like for example below 70, I'd say, is a time to buy more oil stocks. But again, like, oil is not a growth industry. I just wanted to emphasize that, you know, it really just moves based on the price of oil. So any stocks you buy in there, it really depends on the price of oil, doesn't it? Demand and supply. Now, builder first source, I already know what this one is. High mortgage rates is the reason why the stock has declined. And, you know, there's been a housing crisis, like too many houses, not enough buyers. It actually rallied like so much in a year, and now it's gone back down. Pretty unfortunate. Where is the bottom? Could go down as 100, to be honest. Which again, it's unfortunate. It is quite reasonably valued though. But yeah, the industry is not very desirable at the moment. So I guess when the mortgage rates start to decrease, this stock will go back up. But if the mortgage rates are high, it's gonna keep going down. And again, the mortgage rates will only go down, I think, if the US Fed decrease the interest rates. And I think they signaled that they're only going to do one interest rate cut this year. And I'm not even sure if that's guaranteed. They just said that's what we're planning. One interest rate cut, I think. And then United Rentals, I think, is quite similar. It's got to be to do with the interest rates. But we could also ask Copilot, why is United Rentals mostly talking about the economic events. I think there was slowdown in construction spending or something. That's probably why it went down. It's rated as a buy now when it was previously said to be a hold. Some are saying sell as well. Not really too sure about this one actually, but I wouldn't put more in it for now, even though the valuation is decent. But yeah, I think the issue really is the stock is just construction industrial stocks in general just not doing well. And anything to do with construction making is gonna struggle pretty much, because a lot of this is, you know, to do with housing. If the housing market is in decline, then I guess your United Rentals would also be in the same situation. So I'm just gonna put linked to housing market decline. Okay. Now the next two might be harder to figure out. Games Workshop. This is a UK stock, so it's gonna be a bit more difficult to measure this one. It's not done well in the past year. Now what actually has happened? Saying massive upside potential. I mean, if you look year to date, obviously it's very volatile year to date. well, not super volatile, but it's like there's no, like it's just zigzag. So let me see if I can find something that details what the UK inflation rate. I believe they've not cut the interest rates in the UK yet. Let me just see. Yeah, the last UK inflation rate is pretty decent. Okay. Seems to be going down. Yeah, inflation's been going down. But the interest rate has not changed, has it? Well, there's wage growth, that's why the interest rate's not changing. Yeah. Okay, so maybe again, no interest rate changes, maybe. See, high interest rates is another problem. I'll leave it as that for now, because again, there's not any news. I mean, let's see what this article says. Can't be in there. Are they? Oh, I must have declined. Okay, yes, it's underperformed the S&P 500. Booming AI tech. Okay. Oh, they're doing woke retcons. What? Not sure what that familiar is. But I'll say high interest rates is the problem, but if there's some issues with the company related to Disney's issues as well, that could be another problem. Now, Mercado Libre is an interesting one. Now, Mercado Libre is down for obvious reasons, actually due to accounting changes, and they're actually a Latin company, so that's a big issue, really. I can't remember where they're based. Let me just check. Uruguay, yeah. Like apparently they've changed their accounting, and as a result, it's going to be problematic for them in the future, possibly. That's why the stock is down in a month. So we'll have to see how that accounting changes their business. I'll have to probably go into detail, into what is going on with them, possibly in another video, maybe, or just independently in my own research, just because I don't understand the ins and outs of their accounting changes. But apparently it's not good for their business. Now Celsius Holdings is a big mystery. Now I'm still in green with this stock, but obviously there's been some huge issues. I mean, they've gone from 95 to 61 in a month. It's a big decline. 35% hit Celsius in less than a month. Spells opportunity to invest at a discount. But what is the reason why they're concerned about its growth trajectory. I mean, if you look at the last few earnings reports, oh, you know what? Their last report, 36% growth year on year, is kind of weak, to be honest, compared to the insane growth rates that came before. So I can understand negativity in relation to that. Because if they're only growing at 30% year on year from now on, the valuation can't be justified. Like, you got insane growth rates here, but now it's fallen off. That would be the problem. So declining growth rates possibly is the reason more than anything else, for this one, I'd say. Like, has Celsius run its course? Who knows? Now, Nexstar Media is the last one that I'll look at. So they're down 13% in a month. Which is surprising because, you know, I thought this would be their best year because it's the election year. Well, the forecasts haven't come in yet, but it's expected to be 785% increase in the next earnings report after this one. So we'll have to see come late on in the year how that affects the stock price. This is a cyclical business, and they're operating in a dying industry as well, cable television. So we can't really expect much. I'm just going to put this one as dying industry, cable TV. They're not really affected by the economic movements of other stocks. So that's pretty much my analysis of my red stocks in my portfolio. I think pretty much I've covered everything except the finance stocks, but again, I think that's to do with a lack of progress in monetary policy, possibly. But other than that, I don't think we have to really report on anything else at this point. I think the long-term prospects, like, I'm gonna basically put an X next to the company that I think has a problematic prospect. So maybe Games Workshop, just because of the industry it's in. Mercado Libre, because of international uncertainty. ACM, China. And then I think Builders First Source seem to have a distinct competitive advantage, so I'm going to put X on there. And then I think that leaves me with Yuri, Dexcom, and Adobe as, you know, still decent investments if you invest in the right. Oh, and also Nexstar Media as well, besides dividend, might be problematic. But Celsius, we'll have to see if the sales keep going down. But yeah, I think that's that. So hopefully that was helpful. I'll see if I can do more